You know it. Yeah.
Hello guys, I'm actually looking at gold now. Gold is looking very great for potential sell. So I want to cover this before trade so that maybe on the trade recap, if I should take the trade in case I have an entry, and I'm going to record the after again. So I'm going to show you what I'm looking for. Now if you come to the daily, gold has actually tapped into this area and then we push. Now look at the momentum that was coming from this area. This is actually a 4 hour. So let's go to daily. Now on the daily, look at that. Look at the momentum that was coming from this area. Price came back and then it's tagged into that area and it begins to go to the upside again. Now we essentially have this area as well, but as you can see, price actually never reacted to that area. So we can take that off. Now price take out this area, it pushed up. This is the first flag. I actually capitalized on the trade right here. But now if you look to the upside, price drop, it gives this consolidation. Look at the momentum that was coming from that area. So it forms a hook point, which is a sharp move up, and then it aggressively dropped to the downside, which caused the break of this structure low right here, and then we eventually tap into this area. Now let's go to 4 hour. On the 4 hour, now look at, you can see the momentum that was on this area. So it's no coincidence that price gravitated towards the area and then it started to push to the downside aggressively. Now for us to actually look at taking the sell on this position, now what we need to notice is that there is no structure leading to this area. It was just a straight impulsive run. That is to say, we don't have anything like maybe 1 2 3 kind of structure like this into this area. So we don't have that. So but the way we are going to approach this one is the fact that this one was impulsive. So if we are going to take a counter trade that is going to be in opposition to this run, we would like it to close at least 50% of the structure. Now this is the impulse. As you can see, this is the impulsive phase. Look at this impulse. Now we have the sellers coming in and they have now actually sell the market down to this level. So we actually have overcome the 50% of the whole move. Even if you want to look at the whole impulsive phase from this area, as you can see, we just trading, just kind of, we have sold all the way to over 50% of this whole impulsive run. So because of that, this actually negates the fact that it could form into any sort of structure to go to the downside. So because of that is why I'm looking for trade on this gold setup. So the entry is going to come from 1 hour. So we're going to see what we have. So as you can see, we have the drop, we have the correction, but then this is not the one. I was actually looking for trade on this one, but as you can see, it doesn't actually give us that, and it's aggressively pushed to the downside. And now it's giving us a kind of type A setup right now. So where we have the false dodge, we have the flag like this, and then we have the bottoms. As you can see, the bottom has been confirmed on this one. So let's go to 15 minutes and see if there's anything we can work with. All right. On 15 minutes, we have this hook point right there. So we will definitely want it to be taken out because this is now a type A plus setup and not just an ordinary type A. So what we're expecting is we're expecting price to actually come and take out this area, and then we will look for our entry candle. If that is confirmed, then we're going to take the trade for a short. And then if you look at this pattern again, this is more like a complete pattern because as you can see, it does have a middle section. We have 1 2 expecting the third touch, and then it has the middle section. So all we need is a kind of a retrace. Suppose we have a candle like this around there. Let's say we have this let's say we have a candle like this. Excuse me. Let's say we have something like this. Now we take that out and then we push back inside. So all we need to do is to set our order around here, have our SL placed just at the top of the structure right there, and then we can manage the trade accordingly. So once price is around this area or anything like 1% or 1.5%, we're going to move to break even. And then when price is here, we're going to start locking in 1% or 1.5, etc. And then eventually we'll be anticipating price to come all the way down to take out this low one more time, and then we can potentially start looking for sell again. So our bare minimum, this is where I want to get out of the trade if it's going to move all the way to this point. But then I'm also going to be looking out for this area, because look at the momentum that was coming from this area. There's high chance for price to actually turn from this area as well. So I'm going to be looking for that. Even to that area, it's going to be 6.9, and then to the overall, it's going to be 9.2. So I'm not too focused on the risk reward for now. All I'm focused on for now is the entry, making sure I get the best entry as possible with respect to my strategy and my entry type. So this is a type A plus setup. So we're going to take it like a type A plus setup. So see you on the next one. So I'm going to record the after. In case I take this trade, I'm going to show how I execute the trade as well. So guys, I'll see you later. Back again. So this is what we got on gold. As you can see, we've actually take that area out. But then my worry, the reason I did not take this position was this gap that was left around here. So I was actually waiting for it to be filled 50%, and then I set my limit order around here for if price should come back up again, then it's going to tag me in, and then my SL or just slightly around that place, which is fine, because if you look at this area, there's nothing sitting above. So yeah, if prices should tag me in and come all the way here, then I don't want to be in the position again. But as you can see, we kind of move up a little bit, but then we just kind of drop to the downside, and then I wasn't tagged in. And this kind of take me back to the previous experience that I had on gold as well, which was about last week. Something similar kind of happened where I missed the position. Although the other difference with this one is actually having a rejection to the upside. But now let's just go back and see that. So something similar actually happened right there, where I was looking to take in this position. Then I have this setup like this. The setup two was more like a type A plus setup. Let's go to 50 minute. We're gonna see it clearly right there. I actually did miss this position as well. I was looking at this position right here, and as you can see, we have the middle section right here. We have the 1 2 3 into this area. This is not the best hook point. This is more like just a kind of weak, but it's still an area to kind of pay attention to. As you can see, we tag that and then we drop. So what I did again here was actually setting my order around here, but then I never got tagged in. So price just plummet to the downside right from there. You can see just go down from there, which means you might also be able to take the trade around here. So I actually want to kind of compare that scenario with this type of scenario, thereby taking the trade. But now the only difference that actually made me stop was, if you look at the way this one closes, the signal here, the candle signal, the entry signal here was so kind of decisive. Look at that. There's no wick at the close. After the close, just closed strongly, which for me signaled a kind of seller's momentum. However, in this case, bear with me. However, in this case, look at how we have these rejections right there. So for me, this is looking more like an indecision. So there's no way I was going to take that. Let's say, because already we have washed that in out. Look at that, we washed that liquidity out and then we push back inside. So definitely, this is more about asking yourself if you can actually afford the risk. And if you go to 15 minutes again, you're going to see that, okay, that was definitely will be a 15-minute, because look at that, that is a 15-minute retrace. But then it is valid if you did take it right here. It depends on if you can afford to take the position right from there. As you can see, you can have your SL above there, and then you still be on the trade for now. But you would expect to get taken out probably, because there's still high chance of price coming to this area, not giving you entry. Before you know it, it will just go up. Typical what gold does sometimes, it will just come back here, and then before you know it's up here. So which is why you want a kind of confirmed entry. You don't want to be kind of guessing and anticipating kind of stuff. Maybe you're just going to sell right away, anticipating that it was going to drop. No, you have to see it live, and then you take your action, and then that way you can go back and relax, knowing that, okay, you did everything you had to do. So in this case, this is the reason I actually avoid taking this position. So I'm still expecting it now. Now, with the way price has done now, am I still going to leave the 50% order open? Definitely not, because look, if this is going to drop, it would have done so. We have 1 2, this is the third hours right now. That was enough for this thing to drop. So if the thing is now kind of trickling around this area. I will expect it to come back again, close around here on the 1 hour, and then once that is confirmed, I'll wait for 1 hour entry. So there's no way I'm going to go for 15-minute entry at this moment. So I'm just going to be waiting to see, okay, if this is going to happen, and this is already 5:30 p.m. So I mean, I don't know this entry. If there's going to be entry, it's probably going to be tomorrow. And then if you still have this type of entry, 5.5%, that is actually still kind of healthy risk reward. So to this point here will be 7.3. So that is actually still healthy. So we're just going to see if price is going to come back here or if it's going to continue to the downside. So we don't know yet. We just have to wait to see what market is going to give us next. So see you on the next update. Hello guys, welcome to Gold Update. This how gold is looking now. Let's just check from 4 hour. Okay, 4 hour is looking good. As you can see, we've actually filled this week on 4 hour. Price actually filled this right now, and then it closes around the edge. So this one we'll be waiting to see if this is going to close as a retrace. Suppose we want to take the entry on 4 hour, so we want it to be a retrace, like closing inside 50% of this candle. Then we can see going to 1 hour again. I think it's clear now. As you can see, those wicks that I talked about yesterday has now been filled around here. So price is now consolidating. All we want to see is price pushing down into the structure. This might still be a 15-minute insurance entry or a 4 hour entry because price has actually pushed out of our structures, especially after this high test right here. This one should have closed for as a bearish candle and then we'll take the sell. But right now, as you can see, it closed above the structure. So let's see on 15. Although on 15 minutes it was corrective. So if we have a push down, let's say we have a push down something like this, we might take it as a kind of 50% order so that we will still be protected a little bit, and then we'll have our SL there. So anything price coming back to this area, we don't want to be on the trade again. If we want more safety or insurance on our trade, we want it to push down like something like this. We want it to push down something like this, and then we can start to look for the insurance entry, either 2 or 3 touch. Let's call it this one. I think this one will be better. This insurance entry will be better because we can go ahead and take a kind of trade. Let's say it closes around here, we can take it and then we still get tagged out. Depends on what we comfortable with, but insurance entry in this scenario will be much more better. And I think insurance entry again would gives more risk reward again. Look at that, to this low 5%, and then to the target that will be like over 15% or something. That's 14%. So I'm not going to get carried away with the risk reward. So with the way this is actually with the way this is correctively moving to the upside, we can see if we are going to close on the phase line break. So if that is going to be possible, then we'll probably we'll set our entry order around here, have our SL above there. Then once we got triggered in, even to this point, give 3.39%. That's still okay. And then to overall targets, that will be to this point, give 7%, 7.8. That's nice. And then to the low, give like 10%. So there's still nice risk reward to play with around here. So we're just going to see if this is going to close, and then once that happens, we'll take the trade. So let me just show you what I'm looking at here, real quick here on Euro USD. Now, as you can see, Euro USD is trading at the low as well. So like I said, when price is trading at the low, you want to be more careful because a lot of things can happen here. So you have to be picky around this zone. What we have here is we have the 1, 2, 3 into this hook point. As you can see, look at how aggressively price dropped from that area, give correction, and then dropped again, breaking these lows. Now we kind of have a middle sections right there, if you can see clearly. Kind of have a middle section. right there. And then at the end we have impulse correction impulse, which is a 1, 2, 3 finish. Although we have this area here, which again on a normal sense you would want it to be filled, because look at that, that's a wick, has high probability of filling. So because of that, we want a more secured entry. As you can see, price dropped. It's now forming 1, 2, 3 with a middle section, now rejecting this area now. So if you go to 50-minute, as you can see it clearly, we have the drop, we have this hook point, price comes 1, 2, 3 into that hook point, and now it starts to reject. Are we going to be taking this on 15-minute entry? I'm not going to be taking it as a 15-minute entry. I would need a more solid weight on it. So which means I'm going to wait for this one to close. Then I'm going to look for the 1 hour retrace, something like this. I'm going to wait for 1 hour retrace. Excuse me. Yeah, something like this on 1 hour, and then take the position, have my SL above there for like 22 pips or something, and then I'm going to target here for 7.5%. So that is the risk reward is there as well. So regardless of what we have, we can capitalize minimum 5% on this position. So I think the risk reward is there. So this is definitely what I'm looking at for now. So those are the two trades I'm looking at currently. Yeah, so see you on the next one. All right, welcome back. Here is the update on gold. Gold is looking, I wouldn't say this is looking nicely, because if you can see, gold now is not trading outside our structure. And this I think this is actually nice for me to be filming this, because I look, there's a lot of people that will keep on chasing the trade, and then before you know it, they ended up taking unnecessary loss. Now let's actually kind of evaluate this thing right here. Look, it would have been another scenario if, for example, we have structure like this, like I've explained. If we have, let's say we have structure like this. Let's say we have this as any kind of structure like this, and then this thing is now here. Suppose we have this kind of 3-touch ascending structure. There's a point I want to drive home right here, because look, a lot of people think because they are drawing trend line, because they are doing high lows trend line, they know nature's impulse correction, that they are trading trend line. They are trading Falcon rather. Look, Falcon is deep. Falcon is not just about the trend line. Like, the reason I'm actually laughing while recording this is that I see someone that was like, I gave Falcon a year, so it's not working for me, and then I'm going to change to price action strategy. Like, what the fuck? Look, Falcon is a pure price action strategy. There's no indicators here. We only use tools, and that is Fibonacci, maybe Gambox, all this kind of stuff. We only use tools to actually identify what pattern or structure we are having, right? So when I'm saying Falcon doesn't work for me, and I want to go to price action, pure price action, not Falcon. Like, what are you saying? Falcon is a pure price action in itself, because you are drawing trend line, drawing pattern, you understand ascending channel, reversal, this kind of stuff. Doesn't mean you are trading trend, you are trading Falcon. Falcon is deep, like I said. So suppose we have something like this. Let's say 1, 2, 3, or let's say we even have a middle section which added depth to this structure, and then we have gold making this type of move. I will be more inclined in this, knowing that, okay, you know what, I can be a little bit like a little bit aggressive on the entry, because I know, you know what, because look, it is going to take a lot. It is going to take like up to a week, 2 weeks or even 3 weeks to build a kind of 4-hour structure that will be this large. Now, if we now build 4-hour structure that will be this large, which means a volume has been built around here, so the distribution will be fluid, right? You can expect the distribution to be fluid. But in a situation where all you just have is price moving to the upside sharply and then sharply dropping, and this kind of happened within how many? Let's even look at everything together to the entry. This is like 11 days. That is less than 2 weeks. I mean, the impulse, not even the build up. The build up alone will take like 2 to 3 weeks to build, and then the distribution will comes in. So the everything now is now ready within 11 days, 12 hours, and then you want you are here taking unnecessary trades, and then you ended up taking a loss, and you'll be like, Falcon is not working. Look, there's in depth, and the only way we are going to learn this is if we actually lay our heads low and learn this thing. Because look, you have to understand this is pure price action. Price action is not about, okay, what other stuff are you going to be learning that is different from what Falcon is already teaching. Or okay, you go and be drawing support and resistance, drawing a zone like this, and be like, okay, we have a retest. That is why, because of the retest on this zone, that's why price is now dropping. So let's start selling. No, this is pure price action in itself. So because of what I've told you now, okay, let me show you an example right here, real quick. Now look at this continuation. When we have this impulse, and then we start to have this continuation. Now, how many days does it take to build this impulse? That was 6 days, right? Look at that, 6 days, 8 hours. Now let's see how many days does it take to build the whole of this continuation. This took like 8. Let's just start here. This took like 14 days to build this. 14 days. Now let's look at this one. Let's forget this impulse. Let's talk about this build up right here. How many days does it take to build the volume right here? 20 days. How many days does it take to build the volumes right here? That's like 26 days. And now you have price sharply moving up and sharply moving down instantly. And then you ended up, there's a lot of people that will come here and they'll be like, you know what? I have price taking these out. I have price taking these out. I have price taking these out. So we have 1, 2, 3. We have internal 1, 2, 3, and then we have that retrace. So I'm going to take this sell right here, and then you take the sell, and then you take a loss on this trade, and be like, oh, Falcon don't work. Falcon doesn't work. I have given it a year. It does not work for me. And then look, you have to put in the work. Look at the week there. We already understood that this is going to get filled. So we are not going to take unnecessary entry right there, especially knowing the fact that we just have aggressive move up to that place and price start aggressively dropping down. So because there's no build up that distribute this volume is just going to move massive up, massive down. So because of that, I'm going to be more kind of careful with kind of trade. Now this trade, now am I going to sit down here and chase this trade? Hell no, I'm not going to do that. There's going to be a lot of entries that's going to shape up. Although we have build up 1, 2, 3 ascending, and then we start to drop, kind of dropping into the structure. But for me, I just feel like, you know what, this thing is not backed by solid structure for me to continue to actually pay more attention to the trade. I would rather just leave the trade. Example, let's see what we have here on this Euro USD and see. Okay, Euro USD, we are looking for this continuation. Now we are looking at this thing right here. Now the reason I actually put this thing is to illustrate this thing for you guys. A lot of people will come to 5 minutes and they will take the entry and be like, look, I just take a loss here. Look at that. There's a lot of people that will be like, we have this retrace, we have price exhaustion, and then we come to 5 minutes, we take this 5 minutes retrace candle, and then because of the fact that again it's tapping into this value area, because of the fact that it's tapping into this value area, it gave us a retrace on the value area. So that's why I take this trade. Now I put my SL to the mountain right here, and then I now take a loss. Now you'll be like, despite the fact that my SL was in a very beautiful place, I still ended up taking, oh, Falcon doesn't work. Falcon is not a nice strategy. I give it 1 year and then it's not working. Look, understand. What do we have here? We have price. Taking this out. Now look at this wick that was thrown right there. We understood that most of the time it will go filled. Now we have this value area right here. Apart from that, we have kind of subjective hook points, right? Look at that hook point. We have this one. We even have this one. And now price left a gap. Price is now trading. Now price formed a hook point right here. Now if you look at that, you're going to see that this has actually exceed. Look at that. Look at the hook points. Is exceed the 50% and is now trading above the 50%. The only entry that I'm going to entertain, I mean, not even 15 minutes is going to be it for me. The only entry I'm going to entertain will be 1 hour push down, like we explained, like 1 hour push down. Once we have that 1 hour push down, and then we have that 1 hour retrace, not even this high wick, 1 hour push down. Look at this close around this area, and then we have that 1 hour retrace. I can then consider it. because I don't know. Okay, I have a weighted time frame backing this thing. Because look, you don't just stand up and be like, oh God, I don't want to say anything. I don't want to say anything. So this is the update. I will not be focusing on gold anymore because this structure is not it for me. Like I'm not taking this structure. We might drop create continuation around here. We might create continuation, let's say around there. But like I said, I don't want to be focusing on it any longer. Like it's off for me, definitely off. So I was looking at this one. I was looking at taking, if we're going to come around this side, I'll probably take this one out and then push down 15 minutes. Well, looks like we are not having it yet. So, and it's already 5 o'clock. Definitely there's not going to be entry for me today. So I'll call it today. See you guys tomorrow. I'm just going to take this off my watch list now and then we go back here. So see you guys tomorrow. I will not be looking at any trade position for today. Today is Wednesday, so to speak. So see you guys. This will be the end of this one. I'm going to post this thing so you see the thought process. So to close this off, guys, this is not the type of trade that you want to be aggressive on. As you can see here, we are supposed to be waiting for the weak field, gut field, but no entry there. There was no 1 hour entry right here. But if you don't understand this thing and then you come to 15 minutes, you're definitely going to see entry. And that is one thing about it. The lower time, the more you go to lower time frame to look for entry, you get what you look for. You get, there's this saying, you get what you look for. You see what you're looking for. You want entry. That's why you switch to 15 minutes. Of course, you get 2 entries, and then they take you out for a loss, 2% loss. And now you're one of those folks shouting, "Falcon doesn't work. Falcon is not a good strategy," because you're drawing this trend line, drawing these structures, everything. That doesn't mean you understand or trade Falcon. There's difference between doing something and understand what you are doing. A lot of people are just doing it. They don't actually understand in depth the intricate details of what they are doing. I think that's why a lot of people are so deluded to be like Falcon doesn't work. I mean, what do you mean Falcon doesn't work? So, guys and girls, this is what I want to drive home. As you can see, from the beginning of when I start to look at this thing and then explain everything in between, and as you can see, everything that I explained henceforth wasn't actually met. So there was no trade. Imagine you don't understand this thing and then you comes here taking this trade, taking the. Of course, you have 1, 2, 3 into this hook point, watched out, retrace. But what was that on the 1 hour? That was a week. It got filled. You'll be like, okay, it got filled in form of 1, 2, 3. You take a 15-minute ascending structure and then you look for the trade and then you tag you and tag you out. You'll be like, I did what the Falcon mechanics say, but then I still got taken out. Hence, Falcon doesn't work. No, no, no. You have to learn how to do this thing nicely. So that's the point I want to drive home.